Hello and welcome back to our channel. If you're over 50 and looking for ways to make some extra money, retire early, or just make life a bit easier, you're in the right place. Today, we're going to talk about something that's incredibly important but often seems out of reach: investing in dividend stocks and bonds, even if you're starting with a small budget. Many people think investing is only for the wealthy, but that's just not true. You can start investing with even a small amount of money and watch it grow over time. And the best part? Investing in dividend stocks and bonds can provide you with a steady income, which is especially helpful if you're looking to cut back on work or retire early. Today, we'll cover everything you need to know about getting started with dividend stocks and bonds, how they can provide passive income, and why they're great options if you're over 50 and want to create a more secure financial future. Let's start with the basics. Dividend stocks are shares in a company that pays you a portion of its profits regularly, usually every quarter. Think of it as a thank you from the company for investing in them. Over time, this can add up to a significant amount, especially if you reinvest those dividends to buy more shares. On the other hand, bonds are essentially loans you give to a company or the government. In return, they pay you interest on that loan, which can also provide a steady stream of income. Bonds are generally less risky than stocks, making them a great option if you're looking for something more stable. Both dividend stocks and bonds can be fantastic tools to help you build wealth over time. And the good news is that you don't need a lot of money to get started. Let's break down how you can start investing in them, even if you're on a tight budget. First, let's talk about dividend stocks. If you're new to investing, dividend stocks are a great way to start because they offer two types of returns: the potential for the stock price to increase over time, and the dividends you receive just for holding the stock. But how do you get started with dividend stocks, especially if you don't have a lot of money to invest up front? Here are a few steps to guide you. Steps to start investing in dividend stocks. 1. Choose a reputable brokerage. The first step is to choose a reputable online brokerage. Many brokerages today allow you to start investing with no minimum deposit, which is perfect if you're working with a small budget. Look for one with low fees and a user-friendly platform. Some popular options include Fidelity, Vanguard, and Robinhood. These platforms often provide educational resources and tools to help you learn about investing, which is especially helpful if you're just starting out. And remember, you don't need to be an expert to get started. The most important thing is to begin. 2. Research dividend-paying companies. Next, you'll want to research companies that pay dividends. Look for companies that have a strong history of paying dividends consistently and have a good reputation in their industry. Companies like Coca-Cola, Procter & Gamble, and Johnson & Johnson are known for their reliable dividends. These are often called blue-chip stocks and are considered relatively safe investments. Key factors: dividend yield, dividend history, company stability. Pay attention to the dividend yield, which tells you how much you'll earn in dividends relative to the stock price. For example, if a stock costs $100 and the annual dividend is $4, the yield is 4%. A higher yield means more income, but it's also important to consider the company's stability. A very high yield can sometimes be a red flag, indicating that the company might be in trouble. 3. Start small and consistent. One of the biggest misconceptions about investing is that you need a lot of money to get started. The truth is, you can start small and build up over time. Even investing just $50 or $100 a month can grow significantly, especially if you reinvest the dividends. This is known as the power of compounding. Consistent investing, no matter how small, can add up over the years. Many online brokerages offer automatic reinvestment options, meaning any dividends you earn are automatically used to buy more shares of the stock. This can accelerate your investment growth without you having to lift a finger. 4. Diversify your portfolio. Finally, it's important to diversify your portfolio. This means spreading your investments across different companies and industries to reduce risk. For example, if you only invest in one company and that company doesn't do well, your investment could suffer. But if you invest in multiple companies across different sectors, you're more likely to see positive returns overall. Think of diversification like a balanced diet. Just as you wouldn't eat only one type of food, you shouldn't invest in just one type of stock. A well-diversified portfolio is key to reducing risk and maximizing potential returns. Now let's talk about bonds. Bonds are generally considered safer than stocks, making them a good option if you're looking for stability, especially as you approach retirement. Here's how you can start investing in bonds with a small budget. Steps to start investing in bonds. 1. Understand the basics of bonds. Bonds are essentially loans you give to companies or governments. In return, they agree to pay you back with interest over a specific period. This makes bonds a great option for generating a steady stream of income, as you know exactly how much you'll receive and when. There are different types of bonds, including corporate bonds, municipal bonds, and government bonds. Each has its own risk level and interest rates. Government bonds, like U.S. Treasury bonds, are considered very safe, while corporate bonds might offer higher returns, but come with slightly more risk. 2. Choose bond funds for easy diversification. If you're just starting out, buying individual bonds might be a bit overwhelming and expensive. Instead, consider investing in bond funds. A bond fund is a collection of bonds managed by professionals that you can invest in just like a stock. This allows you to diversify your investment with ease and at a lower cost. Bond funds are available through most online brokerages and are a great way to start investing in bonds with a small budget. You can choose funds based on your risk tolerance and financial goals. For example, a government bond fund might be more stable, while a corporate bond fund could offer higher returns. 3. Start with a small investment and grow over time. Just like with stocks, you can start investing in bonds with a small amount of money. Many bond funds have low minimum investment requirements, making them accessible to almost anyone. As you gain more confidence and your financial situation improves, you can gradually increase your investment. Bonds are typically less volatile than stocks, meaning they don't fluctuate in value as much. This can provide a sense of security and peace of mind, especially if you're nearing retirement and looking to protect your savings. 4. Balance your portfolio between stocks and bonds. Finally, it's important to balance your portfolio between stocks and bonds based on age, risk tolerance, and financial goals. A common rule of thumb is subtracting your age from 100 to determine the percentage of your portfolio in stocks. The rest should be in bonds. For example, if you're 60 years old, you might have 40% in stocks and 60% in bonds. Balancing your portfolio helps manage risk and ensures you're not overly exposed to the ups and downs of the stock market. It also provides a steady income stream through dividends and interest, which can help you achieve financial freedom faster. Investing in dividend stocks and bonds is a powerful way to build passive income and create a more secure financial future, especially if you're over 50. The key is to start small, be consistent, and diversify your investments to reduce risk. Remember, it's never too late to start investing, and you don't need a lot of money to begin. Every small step you take today can lead to big rewards in the future. So, take action now and start building the financial freedom you deserve. Subscribe for more tips on investing and building passive income. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more tips on investing and building passive income. And if you have any questions or topics you'd like us to cover, leave a comment below. We're here to help you every step of the way. Thanks for watching. Start investing today and make your money work for you. See you next time.